I'm going to show you guys in depth how to use SMT divergence and the ICT market maker buy model. We first need to understand what the market maker buy model is. I'll dive deep into SMT next with a real chart example and then also a real trade example. In the market maker buy model, there's a few different components to it. Price creates an original consolidation where it's moving back and forth. It's just within a range. Then it moves away from that range. When it moves away from that range, this movement down is categorized as the sell side of the curve of a market maker buy model. So we have the original consolidation up here. We have the sell side of the curve when it moves down. Once it creates this reversal point, you look for that reversal point at a higher time frame level of liquidity / a key PD array. That is categorized as the smart money reversal. So we have the SMR. That's what I'll just label it as. After that SMR comes in, you look for price to go to the buy side of the curve. And what's going to be the targets on the buy side of the curve? Well, as price is on the sell side of the curve and it's continuing lower, it's leaving behind these old highs. See how we leave behind this high, and this high? The objective on the buy side of the curve is to take out the old highs, which smart money engineered. And what do I mean by they engineered it? Well, if smart money wants to sell at a higher price, they need willing buyers. So when price retraces back up here, anyone who gotten short, right? We're all taught in retail books to have your stop above old highs. Buy stops are going to rest above here from those short positions. Also, retail breakout traders are buying. So smart money has someone to sell to above these highs. The original consolidation is going to be the terminus and going to be the ultimate objective of this market maker buy model. So it's moving from the original consolidation, it's moving away from that on the sell side of the curve, creating the smart money reversal, which just means smart money bought down here, and then price moves to the buy side of the curve and it takes out that initial high where the retracement down occurred. What we can also utilize is SMT divergence, which is what I'm going to talk about in this lesson, which is at the higher time frame liquidity or PD array. What's a PD array? That could be a fair value gap, order block, breaker block, mitigation block, things like that. We can hunt for an SMT divergence between ES, NQ, and YM. So we're going to be diving into what that looks like right now. A lot of people overcomplicate SMT divergence. I'm going to make it as simple as possible in under 60 seconds here. YM, ES, and NQ, they're correlated assets. They should move together. If YM makes a higher low, ES should make a higher low, NQ should make a higher low. That's what a correlated market looks like. When one of those assets, doesn't matter which one, breaks that correlation, and then instead of making the higher low, like the other two are doing, that we see a cracking correlation from those two assets and it makes a lower low, that is SMT divergence. It's as simple as that. So NQ makes the lower low, ES makes the higher low, YM makes the higher low. This is bullish SMT divergence. If you wanted to flip it, I could do Alt-I and show you what that looks like. YM makes a lower high, ES makes a lower high, NQ makes a higher high. This is bearish SMT divergence. It is when one out of the three sees a cracking correlation, okay? So when this occurs, you're looking for ES and YM. You're looking for the setups on those. Why am I looking for the setups on those? Because these are going to be faster to the upside. Think about it like this. NQ is weaker. It's creating a lower low. ES is stronger. It's making a higher low. YM is stronger. It's making a higher low. It's showing strength in these two assets right here. This one is showing weakness. So if you're trying to target a higher level of buy-side liquidity, ES and YM, most of the time, not every time, is going to reach that level of liquidity before NQ does. So I'm trying to find at a smart money reversal level, the one that creates the higher low, and I'm trying to stick with that. So this is what SMT divergence looks like. Similarly, if we flip it, I'd want to be trading ES and YM here still because it's making a lower high. It's making a lower high. NQ is going to be stronger to the upside here because it's breaking above this previous high, but it's not going to hit this level of sell side liquidity first. So that is bullish and bearish SMT divergence. If you guys are interested in seeing more content from me, I do post these trade ideas beforehand in my Discord. Here was this morning at 9:04 a.m. I said FVG tapped into on the 15-minute time frame with a 1-minute change in the state delivery, seeing if price can run up to these specific levels in here, which was the buy side liquidity. So I explained to Discord members beforehand it was likely to drop into these two levels. You can see immediately at 9:30, price just repriced back higher to those buy stops. A little bit later in the day, we did have another nice setup on the 15-minute. where I was looking for price to run up into 49.54. You can see it did deliver to there nicely off that 15-minute fair value gap. So if you guys are interested in learning more about ICT concepts, I do also have a 7-day video course in there. All that can be found on my Discord, and there's a 3-day free trial link if you're interested in joining. First link down below. So now I'm going to show you guys an example of how I utilize that exact logic that I just talked about before on this trade on the S&P 500 today. So you can see if I go down to the 1-minute time frame, I pretty much bottom ticked ES today. So we had the entry at 49.50. This was on 2 contracts. So entry at the same exact spot. It went down to 49.42. So I was in pretty much zero drawdown here. And price spooled higher to take out the buy side liquidity here. So I took one off there, and then I took another one off at 49.52.75. So I was utilizing the idea that if we go back to the 15-minute time frame, order flow has been bullish. Price was retracing back down. If you saw in that previous example, I'm looking for a higher time frame level of liquidity or a higher time frame PD array. So we have this big fair value gap right here. This was a higher time frame PD array you could have used. We also had this 15-minute level of sell side liquidity. So I was personally using the 15-minute level of sell side. We had these relative equal lows in here. Price retraces back down. When price takes out this 15-minute level of sell side liquidity, since the market is at all-time highs right now, there's nothing to aim for on the higher time frame. So I can't have a 4-hour bias. I can't have a daily or weekly bias. I have to rely on lower time frame charts for my higher time frame bias. So I'm utilizing the 15-minute time frame as my higher time frame bias. Remember in that previous example, we're looking for smart money reversals to occur at higher time frame levels of liquidity or higher time frame PD arrays. So right here, we get this manipulation down. This is at 8 a.m., manipulates down hard, and then starts to retrace back up. Now there's a specific signature and price action that I look for personally to find a smart money reversal, and also go over how to spot the original consolidation in a minute, so don't worry about that. But really what I look for is I look for price to create a change in the state delivery. So we have these 4 consecutive down close candles in here. I'm looking for price to break above those and create a fair value gap. So notice how price closes above the order block, creates this bullish fair value gap right in here. When I see that, this indicates to me the bottom of a smart money reversal, since it's already at that key level of sell side liquidity. Notice how we don't get any change in the state delivery in here. That means no trade. So when price creates this change in the state delivery, to me that indicates that we potentially have a smart money reversal and price can start targeting higher prices. Now if we go back to the 5-minute time frame, there's a few different ways that you could view this, and I'll show you how I was viewing it. When looking for the original consolidation of a market maker buy model, you look for where price started to retrace back down. So if we look at this high up here, this will be like the textbook version of an original consolidation, because price consolidated and moved away from that. So then now price on the buy side of the curve would target the liquidity above here. Okay. So original consolidation, sell side of the curve, buy side of the curve. What I often will do is find an area, just a very easy target. I'm not looking to have to hold all the way to this previous day high over here. I want to be able to target liquidity and not have to wait the entire day to target it. So right in here, we do have this 5-minute consolidation. So I could just aim for these highs. So whether it heads up here or not, I could also look at this on the lower time frame as an original consolidation. Price retrace back down, and I could target this liquidity instead. So that's the logic that I was using. I was targeting these highs. So think about it like this. Price took out sell side liquidity, left these cluster of highs behind. It manipulates down when it takes out the sell stops on the 1-minute time frame. It breaks above this order block. So we have these consecutive 4 down close candles. Price breaks above them, creating a fair value gap. This indicates to me a change in the state delivery. And now what can price do? It can start targeting these relative equal highs here. So where did I take off first? Took off at this high. Where did I take off again? I took off around this high in close proximity. And you may say, well, Dan, what about SMT divergence? We're about to cover that now. I'm using that as extra confluence for this entire idea. So if you notice on the 1-minute time frame, price created an SMT divergence at the smart money reversal level. So when price creates a smart money reversal, you can utilize SMT divergence and the cracking correlation between these correlated assets for extra confluence on the trade idea. So price created the change in the state delivery, broke higher, retraced back down. We had SMT confirmation NQ was making a lower low, ES was making a higher low. Okay, so this one's going to be faster to the upside, and notice where I targeted up here, these levels got hit first. And if we look on NQ, it didn't even run up to these levels. Why? This is the weaker asset. This one's going to be stronger to the upside. So that's how you could utilize SMT divergence as extra confluence, not something you want to just use 100% by itself. You'll have a very low accuracy rate if you're just using that alone. But when you combine it with the market maker buy model logic, it can be used as extra confluence and definitely help. That's going to be it for this video. Hopefully you guys found this insightful, and I'll catch you guys in the next one.